Good morning, everybody. Happy Tuesday. We have an amazing show for everybody today. Do we live for the pound or no? All right. Oh, we live. People live for the pound. There we go. I still get to say it.
We're fomenting a coup today.
Yeah, we're fomenting a coup here
Takeover.
over at Breaking Points. Emily is in for Crystal, who will be back tomorrow and on Thursday, so don't worry about that. But Emily, the people have cried out for an Emily and Saagar show for a while. According to our records, it has been 2 years since the last Emily and Saagar show.
What a gift to everyone in the audience.
Yeah, so it is a great gift that we do. So people can't accuse us here of not giving in to our audience demands, right? So the people demanded it, and the people are getting it by plebiscite. So there you go.
I think the last time we did it, by the way, there was a brick wall behind us.
Yes, there was. Yeah, that's right. That was before the new set and everything. So yeah, look, you can see how far we've come.
That's right.
All right, what the hell are we covering today? This is the toughest part of the job, setting all this up. Tariffs. All right, tariffs. We're going to talk about tariffs. A worst April for the Dow Jones since the Great Depression. Not exactly a great headline there for the administration. We're going to talk about some of the movements in the stock market. Big dump yesterday of major stock indices, as well as some major movements by China, warning other countries not to team up with the United States. We're going to continue the coverage of the Pete Hegseth saga. There is just insanity going on. Pete Hegseth knifing his own staff in the back, who recently were fired from the Pentagon. We also have one of those former staffers, Dan Caldwell, speaking out on the Tucker Carlson show, really giving us some insight into the knife fights that are happening in the administration over war with Iran. We're going to talk about Kirsty Noem. She apparently got her purse stolen despite having been surrounded by Secret Service agents. She had $3,000 in cash on her. Just some very weird stuff that's going on, and obviously also an insight into one of the top law enforcement officers in the United States. This is a topic I selected specifically because Emily is here with me. We're going to talk about the Trump administration's efforts to boost birth rates here in the United States, focused specifically on motherhood, tax breaks for new moms, medals for mothers that have more than several children. So we're going to break some of that down. We're going to talk about that fight with Harvard, between the Trump administration and Harvard, a major escalating legal battle between the two. It stems from that, quote, anti-Semitism fight, but it's actually become much bigger than that. And then we're very excited to be joined by FIRE, the president of FIRE, who is going to break down some of the free speech attacks by the Trump administration. FIRE, Emily, probably the single best organization that's been consistent and principled on these matters over the years. Really, we always look to them for guidance. They've spoken up on very unpopular issues, popular issues. They don't care literally at all. So we're excited to speak with them. And then also, I guess people are also getting their wish here, an AMA with Emily and I for our premium subscribers. So don't forget, you can support us at breakingpoints.com. You can participate in these live AMAs and more, and also see Emily every Friday on the Emily Show, or on the Friday show. Sorry, I guess we can call it.
We should call it.
Should we call it the Emily Show? Yeah. I like it. I like it. All right. Don't forget, if you can't support us right now and all of the new expansions that we're doing here, it's totally fine. Just make sure that you like and subscribe to this video. And if you're listening to us on a podcast, just go ahead, give us a 5-star review, and send the episode to a friend. That is the single best thing that you can do for us. You can even pick your favorite episode. Emily, you know, what's fascinating in our podcast downloads is that there are hundreds of thousands of people who listen to these like at the end of the week. Like they don't listen to them daily. We have a huge spike in Fridays and Saturdays. I'll be honest, I don't get it. But I guess it kind of makes sense.
Is there
like catching up on the news.
In any particular episode? Like is it Monday?
No, yeah, like the Monday episode will boom on like a Friday. I'm like, I don't get it. I mean, YouTube is much more like regular, you know, like after 48 hours or so, like most of the people who've watched something are going to watch it. There are a few evergreen topics, but yeah, these podcast listeners, man, I've been trying to understand these people for 4 years. I'll never get it, but it's okay.
That's
we love you anyways.
Interesting.
Yeah, we love you anyway.
All right, so if you're listening to this on Friday.
4 days from now, if you're listening to this 4 or 5 days from now, go ahead and follow your instructions, okay?
Yes.
All right, let's get to the tariffs. So massive sell-off in the stock market yesterday. Not one particular thing that seems to have set things off, but just still real signs of danger. Here's CNBC right around the close. Let's take a listen.
Look at the markets, which are very unwelcome on this Monday afternoon. The Dow is down 1,270 points right now, so we're at session lows. And if we close here, It will be the 11th 1,000-point drop in the Dow's history, and it's the 4th this month. Now, the S&P broad market, here's what you need to know. Down 3% and down 16% from the 52-week high. We're about 200 points above the intraday low of 49.10 on April 8th. Keep these in mind as people look for a retest, and is that an entry point? The NASDAQ is the worst of the major averages, led lower by NVIDIA and Tesla. Tesla down 7% ahead of its earnings tomorrow. And of course, check the yield on the 10-year, because unlike most previous stock sell-offs, where you at least get some cushion here, nope, not getting it today, 440. This time treasuries are being sold as investors sell stocks as well. Dollars down, yields are higher.
Yeah, and actually the yield has spiked even more since then. We're going to get to that in a little bit. But let's go ahead and put this up there on the screen. The Dow is currently headed for the worst April since 1932, as investors are sending no confidence signals. Quote, few think the administration's negotiation with trade partners will yield results soon enough to ease the strain. And Emily, that really seems to be a big thing that was dawned on the market yesterday, and a lot of these investors, is the fact that the Japanese talks went so badly, and that the Japanese prime minister and their team left Washington with no deal. And then, honestly, the worst signal was not just them leaving. It was the Japanese prime minister going to parliament and declaring, we will not concede to all of the demands of the United States. They are actively counter-signaling the Trump administration at home, and by the way, to great popularity, actually. The Japanese people not very happy about the way that they have been treated throughout this process. There's been ongoing talks there with China and with South Korea, something, Trump historically has made 3 countries which absolutely hate each other's guts to at least move in some solid direction as a result of the tariffs. And so I think as this begins to dawn on the investors and on the market, they're seeing that Japan, which was supposed to be the check mark, like that was supposed to be the easiest one to be done. And they're like, holy, we have 70 more of these trade deals that are supposed to happen in 90 days. They're like, this is just not going to happen. Like, this is not reality. And then no signal yet from the Trump administration around any sort of cave. The more that starts to set in, I mean, everybody celebrated that stock market bump after the 90-day pause. We are just a few, maybe 2-3% or something like that away from being right back to where we started, even before the 90-day pause where they initially wanted. The bonds, obviously, we'll get to in a little bit, but this is not a good sign.
Yeah, I mean, this is maybe the worst sign, because
I would say it's the worst sign.
There's a counterfactual here where Trump actually is signing and inking all of these really good deals, and that sounds a little bit ridiculous, but it's possible, right, that he could be coming away from this with actually some significant progress in these negotiations with Japan, with places like Vietnam. It's entirely within the realm of possibility, but it's also the predicate for his entire strategy.
Yes.
His strategy hinges on being able to seal these deals, to seal them quickly, and to get good ones. And again, I think it's more likely than not. It's always been more likely than not that wouldn't happen. But it was always a possibility.
Look, it was theoretically
always a possibility.
Possible.
Right.
What's interesting, too, is Charles Gasparino over at Fox Business just said today, quote, about 10 days ago, Scott Bessent was telling Wall Street executives that he was making progress cutting trade deals with India, Japan, South Korea, and Australia, some of the largest trading partners, quote, then nothing happened and the markets tanked. So there's been a combination of a couple of factors. It's not only the lack of trade deals, there's also been Trump's escalating attacks on the Federal Reserve Chairman, Jerome Powell. And look, I mean, I don't think Trump is empirically incorrect that we do need a rate cut, but it's really more about the signal that he himself would take some of unitary executive power over the central bank, which would mean that there would be an escalating fight and, most importantly, uncertainty. So it's not the fact that investors don't want a rate cut. They would be absolutely happy to do so. As we've already seen, the European Central Bank has cut rates. There's been numerous other countries that have done so as well. The dollar right now, by the way, is a disaster. The dollar is down to, I believe, almost every currency except for the Turkish lira. All-time highs, or not all-time highs, but near all-time highs with the euro, the Japanese yen, and a few other currencies, which traditionally actually were quite down. This is very difficult because even without tariffs, that means that these foreign goods are going to be more expensive for United States investors and importers that are able to afford this. That is not to even mention, the other stuff that's happening right now in the markets. Let's put A2, please, up on the screen, because this really actually underscores a lot of what I'm talking about here, about the dollar weakness. Quote, Trump trade offensive threatens America's financial primacy. And the rising volatility and the dollar weakness is raising fears for a financial realignment away from U.S. shores. And so this is the big fear right now, but the move away from the United States dollar as a reserve currency. Traditionally, as they were talking about on CNBC, you see bond yields start to go down, which obviously has major pressure in terms of interest rates, the Federal Reserve, but we don't see that. And so really what we're seeing is both a fleeing from U.S. markets and from the U.S. dollar. And so when you have massive uncertainty on those two things, as well as this massive pressure in the bond markets, you basically have financial uncertainty and pressure at all levels, at the consumer level, at the equities level, at the bond level, and now at a currency level. In fact, I was just reading today that one of the largest foreign exchange of traders, like of currencies, has been margin called and has to basically halt like all trading. And so there's, I mean, look, I'm not shedding tears here for Forex traders. It's like, oh, boo-hoo. But it's a signal, obviously, that the uncertainty and the like basically shock to the overall dollar is causing fundamental questions to be asked across the world. And I think it always just returns to why. It's like, if that's a result of a war, if that's a result of outside pressure, if that's a result of a hyper-intentional policy for de-dollarization across the world to make U.S. goods more competitive, for genuinely good trade deals, a lot of people will be fine with that.
Exactly.
Right? Yeah. But the point is that within this vacuum of chaos, where there seems to be no policy agenda, everything is basically at the whims of whether Peter Navarro is on the right building in the White House complex or not. That's when everybody is just like, yeah, I'm done. I'm hoarding cash if you're lucky enough to have some, taking out debt, or if you're a company, I'm buying nothing for the next 90 days. And, the freight drop that's coming from China, it just still has not set in for people because you're not ready for like the price increase at Costco. You're not ready to go there and to see stuff that you normally would that's just not on the shelf. It takes a couple of months to see that happen. I mean, don't forget, the peak of inflation in the COVID era was 2022. Even though 2021 was marked by all of those increases, it was really after the invasion of Russia where we saw massive shock to the financial system, massive shock to the energy market, and basically a year of unchecked inflation that the government allowed to basically just happen, where all of those things culminated, where people were like, I am done with Joe Biden, and I'm really done with the overall U.S. economy. And they really never forgave him for that. And I think that they're really on track.
You know this as well as I do, but a lot of people in the White House right now specifically are looking back to 1981. Yeah. And they say Ronald Reagan weathered a temporary recession. The short-term pain paid off for him. Yeah. He was able to, muster he was able to mobilize voters and have a very successful return to the presidency. This is very different from that in a couple of different ways, but just one important way that you alluded to, it's not about price. This is not just about price increases.
Yes, that's right.
This is about the availability of goods. This is about scarcity. This is about things changing. This is about the shelves changing, not just the prices going up. And I think to your point, not only is that not sunk in for consumers, I don't think that has sunk in for the administration. And the uncertainty as leverage was always, again, if this entire strategy were to play out successfully, that had to be very temporary. Yeah, and because it was good leverage.
Yeah, but let's talk about the 1981 recession, because that's a very important point. But why did Reagan get forgiven for the 1981 recession? Because it was a hangover of vulgar monetary policy, and thus people forgave Reagan because they didn't think it was his fault. Yeah. And also, Reagan was a really good politician at the height of his, literally probably at the height of his like rhetorical powers. In 1981, where he's like, oh, the happy optimism, the jelly beans, and all that. And he's like, look, he's like, we're going to get through this together. He was an excellent communicator, and he was actually able to use that recession to eventually push a lot of major legislation. Now, we can debate the effects and all of that, but that was a hyper-competent, in my opinion, team, regardless of whether you think that what they did was good or not. But most importantly, they were able to blame Carter and Volcker for much of what transpired from 81 and in 82. the Trump administration does not have that luxury. Already America is like, Biden who? They're like, who is that? I don't know who you're talking about.
They're also asking
Yeah.
the public to significantly renegotiate its relationship with consumer goods.
Yes.
Period.
And
It's not just
I
about
would
prices.
say beyond consumer goods, I would say they're asking them to renegotiate like the very terms of which they understood their economic life. And like that is, again, you know,
that's true.
you don't, there's, America, if we look back, like they're really only going to tolerate that in a time of war. Like, and even then, people are going to get pissed.
Which is also where
Yeah.
Reagan was successful.
Yeah, that's true.
Because of the Cold
We had
War.
the Cold War.
Yeah.
Very good point. You know, I was reading, I think it was during World War II, there was like a national speed limit of like 35 miles per hour to conserve gas. People hated it. But they were able to tolerate it because they're like, okay, you know, we're in the middle of a war. But basically, like the moment that I think the Japanese surrendered, they're like, yeah, we're driving 50 miles an hour now. Okay, like the shit's over. Like, where's my goods? I need some serious return for 4 years of lack of food and of driving super slow, even though we didn't even have any highways or anything back in that time. So, you know, America's always kind of been that way.
You're full of fun facts, Saagar.
Yeah, it's always fun times, you know, over here. All right, let's go to the next one, shall we? This is about the bond market. So to resurrect the Joe Weisenthal term, the bond market is the real deep state. A3, please. And what you're watching there is that the long-term bond yields are absolutely blowing out right now. And so, look, obviously these things are variable, but as of this morning, we saw a 4.9, yield on bonds, which is like on the 30-year bond at 4.9. Again, let's remember why this is important, which is that this means that debt servicing, interest rates, and all of that are going to be more expensive for the government. It also means that there is a either sell-off or lack of demand for the United States dollar and for our bond, the very credibility of the United States financial system and of the United States. Like, I don't even really know how to describe it because it is so consequential. Remember, it's the bond market that was took down Liz Truss as the prime minister. But it's important just to remember that when you see that happening, it is a direct contradiction of the stated goal of the Trump administration.
Yeah.
Because one of the ways that Secretary Bessent was giving people a lot of cope is he was like, yeah, the equities markets, they go up, they go down, etc. But the bond market, if we're able to do that, because traditionally that's usually what happens during a downturn, well, that will be overall more beneficial to U.S. consumers, to our financial system, for the U.S. Treasury. But instead, they've had the exact opposite, which definitely indicates foreign, basically fleeing of the dollar and of lack of confidence in overall U.S. markets. So that's what a lot of us are looking at.
Again, uncertainty. Yeah. And I think fluctuations we see yesterday were because of I would argue that a lot of it was a reaction to the tripling down of the attacks on Powell. It just because it creates uncertainty.
Of course. I mean, and that's, I was talking with some people yesterday. I go, why? Yes, because, you know, we saw like a 3-something% drop in the S&P 500. And there was, I mean, by the way, that's the funny thing somebody said. They're like, we're so desensitized that a single 3% drop is like, whatever. I'm like, no, that's actually a lot. If you look over the traditional time horizon, like this amount of complete like up and down, you know, in a single day without any market without like an announcement of bad earnings or a major policy announcement, and everybody's kind of just collectively like, this doesn't seem to be going that well. That's actually a really bad sign because it means that the slide can just continue. Keep in mind, we're recording this earlier in the morning, so let me take a look at the futures. S&P is up by like 0.7%. It's not great. It's like, you know, still down obviously from where we were whenever we began, even on Monday. And actually, you know, Joe Weisenthal again flagged something which I thought was absolutely harrowing for the private markets. Let's go ahead and put A4 up there on the screen. He says, quote, Blackstone is now down 40% from its November highs and is now right back at its post-Liberation Day lows. Remember, this is probably the best-run manager of private assets in the world. So just consider how your run-of-the-mill private equity or VC shop is looking right now. You know why I found that so important is I'll never forget. So the very first person I ever spoke to who told me that there was going to be major economic problems was actually David Sachs, and it was an interview. I think I did it with him back in early 2022, before even the invasion of Ukraine. And I remember him telling me, he goes, VC valuations are down massively. And because this is the bleeding edge of the financial system, when we're watching like lack of liquidity and overall just like lack of investment and VC valuations and all that stuff start to go down, that's usually an indication where the private markets are for where the public markets will head soon. And I would say maybe within 3 or 4 months, everything that he said ended up correct. And I was like, wow. So that gave me a lot of respect for some of the insight of where these private market entities can tell us about not only valuations, but also of what future behavior will look like. So, if you're Blackstone, you're down 40%, you have to start selling stuff like soon. You're getting pretty close, where if you're going to half your value from November, like you're going to have some serious pressure from your investors. And these people, unfortunately, again, I don't want it to be this way, they control a lot of stuff. And so if they offload, single family houses, that could have a major impact. If they offload, they control so many major companies or stakes in companies, and this is the worst possible outcome, what do these private equity goons always do whenever there is a downturn? They fire people.
Cocaine.
Yeah.
Oh.
Well, yeah, that too. Actually, no, they're not doing cocaine because they can't afford it anymore.
That's right.
No, so they're doing what's legal cocaine now these days? I don't know. Celsius. They're drinking tons of Celsius. But the problem that we see for them is when they have to offload and then they come in and they just gut these companies.
Yep.
And you see tiny little signs of this. Southwest getting rid of seating, right? Jacking up its rates, trying to add first class. You see already, the airlines are always a classic example of recession indicators. We're going to see many other businesses, which Blackstone, again, unfortunately, does control, along with a lot of KKR, all of these major shops. They run massive businesses that employ millions of people across America, or they own stakes in them. And as investors, they're going to put pressure on them to probably reduce headcount so that they can increase their overall share price. So I actually thought that was one of the more important ones. And also, the indication there on venture capital and on private equity, like that, when that stuff starts to dry up, again, we saw major problems in our markets in 2022 and in 2023.
Well, I just want to say before we move on, that underscores, that's why I think, again, this question of certainty and strategy, and you've been making this point all along, but like there was, to your point about David Sachs having these insights literally years ago, there's a pretty optimistic, I think I was more optimistic than you when Liberation Day was being teased and rolled out, because this is actually based on some like very accurate and unpopular, I think, understandings of the United States economy.
Sure.
And so there was a way that with a strategy, with coherence, and with a sense of purpose and certainty, everyone looks like they're walking in step. This would have actually done something pretty interesting. There definitely would have always been short-term
Well, let me clarify. I was never not optimistic. I had a baseline level of optimism until that chart came out. And when I saw that chart, I was like, that's it. I knew I will never forget it. And I was like, holy shit. Looking at that, seeing what the 50% whatever tariff on Vietnam, I was like, yeah, this is over. And then learning
but they still could have recovered from that, right? Like I think they could have. They could have easily come out the next day and said, we talked to Vietnam overnight and came, but
I think for me, it was that, within hours we learned the way that the actual calculation happened. And then when you learn that level of care went into the stewardship of the global economy, that's when I was like, sell. It's like the biggest sell signal I've ever seen. I was like, nothing that these people do, they may stumble into something good, but intentionality or planning behind it, no.
Yeah,
and I think that's really, that's why the market's tanked as well. A 10% universal tariff, again, I don't think it's a terrible policy. We could talk about it all day long. It's one of those where if it had happened, there definitely would have been obviously a market correction of some kind. But I genuinely don't believe it would have been similar to today, where we have wild swings of up and down. And I can tell you this, 10% is still, even if you think that that's crazy, that 10% is still much more certain than the bullshit that we're dealing with right now.
Exactly.
Yeah, and that's the problem.
Yes.
Where they face. We're watching this all play out. And really the signal to me, it's not just about China, which we're about to talk about a lot, and the level of care that they're able to put into the stewardship of their economy. It's watching the other countries have to deal with this. The U.S. allies, the people that we genuinely do need, like the Japanese, the South Koreans, the Vietnamese, and to watch Xi Jinping get heralded on the streets of Vietnam, again, a country which is basically, like in a conflict with China over the South China Sea, which doesn't necessarily they have complicated relations with them and complicated relations with us, but broadly a population of people which love the United States, even though we destroyed their entire country. It's kind of amazing, actually. And then to see them immediately host Xi, and Xi going to Vietnam and then giving a speech about aligning with China, and then watching same in Singapore and many of these other countries, which these are very important to the future of the globe, because 50% of global GDP will be there just in 5 years. And they feel deeply abandoned. I mean, all the stories coming from the Japanese are insane. They show up here in Washington in good faith, and they're like, so, what do you want? And they're like, well, what are you offering? They're like, but we literally don't know what you want. And, not just even culturally for them, they're like, this is a clown show. In Japan, in their business culture and all of that, when we just think about respect and certainty and consensus and who to trust, like they have very well and clear defined avenues through which decisions are made. They, along with us, have no idea if they can even trust Secretary Besson, or if they can trust this or the U.S. Trade Representative. And then they watch the U.S. Trade Representative learn about the 90-day pause when he's giving a testimony before Congress. So if that guy's sitting across from me, I go, you don't know anything. I'm not talking to you. I just want to talk to Trump. And then Trump makes him wear a MAGA hat that he signs in the Oval Office and put it on for a photo opportunities. Yeah, I don't know. I feel for them. I really do. And it's not a joke, right? Because it's the future of their economy, it's the future of our economy.
Well, I was going to say that it changes their own political calculations.
Which is already happening.
Yeah, there's a decent argument being made by Eric Kaufman, Matt Cottonelli, and others that what's happening is actually the undermining of global populism, which Donald Trump has tried to fuel, has actually sought to build up. And because people are now responsive to their own economic needs at home,
of course,
Canada is a really good example of this with Poilievre. You have to come out swinging against Trump. And so it completely changes the incentive structure.
That's a great point. I hadn't thought about that, but it's exactly right, where you're actually empowering more establishment forces in the European Union, in Japan, even Javier Milei is counter-signaling Trump on the tariffs. You've lost basically
when you've lost
everybody.
Milei.
Right. No, I mean, this guy is probably the most MAGA that there is in Latin America. All right, last part here. This is too much. At the very same time this is all happening for us, Secretary Besson, for some reason that will remain completely unknown to me, decided to put out a lecture on his Twitter account of financial literacy and savings for Americans. Let's take a listen.
Everyone should care about financial literacy, whether you are a student with a summer job or a part-time job during school, whether you're in college, whether you're starting your career, or whether you are at the end of your career. Making good financial choices creates economic security, and look, it's fun. You learn about the markets, you learn how to properly allocate resources, and there's a big payoff over the long term for something you can do early in your career.
I couldn't believe that. The tone deafness of this near billionaire Secretary of the Treasury at a time of financial stress, trying to tell people about savings and financial literacy. It's like, why don't we leave that to Dave Ramsey, okay? It's like, maybe.
That's your real beef with it, that they should have just had Dave Ramsey.
Yeah, they should have just had Dave come in and get, listen, at least the guy's consistent. He's saying that all the time.
Oh, Dave Ramsey's the best.
Yeah, I mean, look, Dave is the GOAT, as longtime watchers know, at least from my perspective. But I just thought it was unbelievable, to put that out and it's just this lecturing and this hectoring about savings. It's like, listen, he's not wrong about the benefit of saving or learning financial literacy or any of that, and I totally support it. But now is not the time to be putting out these types of public messages, basically trying to signal everything is for you, right? You need to learn public markets. And meanwhile, I'm one of the most powerful, individuals in all of American finance, and I'm like screwing with the bond markets and all that, nuking your 401k or your 529 plan.
That's a good point.
Yeah.
So Beston's like, I can nuke your 401k with a single word.
Yes.
Meanwhile, you better get your financial literacy in shape, which is because like it's not wrong.
No.
He's right. It's like,
he is right.
Because our market is so convoluted and ridiculous and built on this house of cards, then yes, you should absolutely be you should basically go full Ted Kaczynski and build a cabin in the woods because they can tank whatever you save for decades with a word.
Bingo.
But rather than fixing that structure, you should just hoard gold.
In the words of Dave, debt is dumb and cash is king. Hey, if you like that video, hit the like button or leave a comment below. It really helps get the show to more people.
And if you'd like to get the full show, ad-free, and in your inbox every morning, you can sign up at breakingpoints.com.
That's right. Get the full show, help support the future of independent media at breakingpoints.com.